Good evening, all of you, and welcome to this quick insight and analysis made by Taxsutra team of experts. I have my colleagues Swapna, Aditya, and Bharti, who shall be joining us very shortly. The theme of this year's budget analysis has been: will the finance minister be able to break the Chakravyuha, which was created after the demonetization? And the first sense, the quick analysis of the fine print, and of course, after hearing the budget speech, in my view, I think he's been able to create a fine balance. And in this case, I would say the finance minister has been successful in sort of breaking this Chakravyuha. I think this budget has received a positive response. Several amendments proposed in the budget speech and the finance bill and the memorandum, in fact, contain several significant amendments in the Income Tax Act. Not many changes in the indirect tax provisions. But to take us through some of the key income tax related provisions, let me request my colleague Swapna, starting with transfer pricing and few other changes. Swapna, if you could take our readers through it.
Yeah, sure. There is a change in transfer pricing in the context of definition of specified domestic transactions. Earlier, specified domestic transaction also included payment made to the parties which are specified under Section 48 OB. But in order to reduce the compliance burden, that particular types of transactions have been taken out from the scope of domestic duty. Another important amendment is in the context of secondary adjustment. When there is an adjustment, it happens in the hands of assessment, mainly in respect of like either payment of expenses or receipt or something by which the income of the assessee increases, or income of the assessee increases or the expense reduce. To that extent, now the finance bill is trying to say that that much amount is taxable in the hands of recipient or the other counterparty. It would be treated as a secondary adjustment. It won't be taxable directly, but that amount would be treated as if like it is a loan to the non-resident party, and the interest would be imputed on certain basis, on certain rate. There is no specific rate specified, but obviously the arm's length provision would apply to determine the rate.
Right. And is there any threshold, Swapna?
Yeah, there is a threshold of 1 crore rupees of adjustment, and it will apply 2017-18 onwards.
Right.
And
so it's prospective.
Yeah, and there are 4 types of situations which have been specified. If there is a particular transaction, particular adjustment which has been made by the assessee suo moto in his assessment, in his return of income, or it has been agreed between the parties in terms of APA or MAP, or it has been agreed in terms of safe harbor rules, or assessing officer makes the adjustment and the assessee accepts that adjustment. In that case, the secondary adjustment provision will be triggered.
Right. Several anti-abuse provisions as well, Swapna, in this budget. Yeah. If you could take us through maybe 1 or 2 of them.
Yeah, there is one provision which has been amended, which is Section 1038, which provides for exemption in case of long-term capital gain on shares on which the securities transaction tax or STT has been paid. Here now the finance bill is saying that the payment of STT also needs to happen on the purchase part of it or acquisition part of it. Post 2004 STT become applicable. So if there is a transaction on which purchase is post 2004
right,
and STT is not paid, in that case the exemption won't be available. But they have also provided for certain exemptions, which would be typically for IPO, FPO, that kind of transaction.
Or bonus, for example.
Bonus or right issue, where the typical transaction would never happen on the stock exchange.
Right, right. Several changes and as anticipated on account of demonetization and sort of curbing the cash transactions. Could you take the readers through the significant changes in the consequence of it?
Yeah. See, basically the theme of finance minister is less cash economy. So accordingly, he has made certain changes. He wants to restrict the cash payment to be less than 10,000. So if there is a payment for acquisition of fixed asset and it has been exceeding 10,000 rupees, it has been paid in cash. It will not be included as actual cost and you won't get a depreciation on it. Similarly, a 35AD benefit won't be available on that. Similarly, 40A3 used to restrict the reduction available for cash expenses payment. The original limit was 20,000, which has been reduced to 10,000 now. And any transaction, any type of transaction which is in cash and the amount is exceeding 3 lakh, such transactions are no more permitted. So those transactions would be covered under the new provision 269 SP, and there would be a 10% penalty for entering into such cash transaction, where the transaction is the payment in cash exceeds rupees amount of 3 lakhs per day per person,
Right.
and there will be a 10% penalty in the hands of recipient of the money.
Right, that's quite significant. Bharti, if you could join us as well. Bharti, we saw several changes being made in the assessment procedure, and one clear theme which came out from the FM speech today is on the focus on the data, use of technology and computerization. They are therefore tweaking the tax assessment deadlines as well. What are the key changes over here?
Yeah. So yes, Amaya, so as you rightly said, in order to minimize the human interface and move towards technology, the FM system has proposed a couple of amendments to rationalize the time limits for completion of assessment, reassessment, basically scrutiny assessment. So at present, the time limit is of 21 months.
Right.
So which is proposed to be reduced in a phased manner to 12 months. So in this AY 2018-19, the time limit will be reduced from 21 months to 18 months, and then in the next year, that is AY 19-20, it is proposed to be reduced further to 12 months period.
Right. So that actually advances all the assessment, recovery, etc. by almost 1 year.
Yeah, exactly.
Excellent. There is also there are a lot of provisions around encouraging a quicker compliance and therefore a carrot and stick approach, stick being sort of additional penalties for delayed filing.
Exactly. So now time limits proposed for making assessment, this reduced time limit are also based on a prerequisite that the returns are filed on time. So in order to ensure that the returns are filed within the due date, so they are now proposing to insert a new section, levy the fee for delayed filing of return under section 234F. So this is over and above the interest which is going to continue, which is under section 234A. Apart from that, even the fee will be levied now for delayed filing of return.
Right, right. And do you know the amount and what is the quantum of this fee to be payable?
Quantum of
Can you make us
the fee of 5,000 rupees shall be payable if the return is furnished after the due date, but of the assessment year, 31st December of the assessment year, and a fee of 10,000 shall be payable in any other case.
Do you think this fee is high enough to be a deterrent for taxpayers to file it on time?
Yes, I feel so. So
Excellent.
we will see more compliant taxpayers now.
Okay, carbon credits is another area which is touched upon in the budget fine print. Can you explain the background, controversy, and what budget is doing around carbon credits?
Yeah, with respect to carbon credit taxation, we have seen diverse, there is a litigation on this point. There are few rulings which say that since carbon credit is an offshoot of environmental concern, it is in the nature of, it is not taxable, it's in the nature of capital receipt. But now everything, the air around this has been cleared, and the FM has proposed levying of 10% tax on carbon credits by way of inserting a new section 115 BBG.
Right, excellent. Aditya, on the indirect tax side, surprisingly, if you would step up forward, please. Yeah. On the indirect tax side, no major announcements in the budget speech. Even in the fine print memorandum and the finance bill, any significant indirect tax changes that you noticed?
Yes, apart from the tariff changes, there are plenty. But if you look at the changes on the legislative side, right, there are 3 significant changes which I feel we need to highlight. One is the amendment to the settlement credit rules, Rule 6, 3D, where there is an explanation which says that when you calculate, to determine the value of of the common input credit that needs to be reversed when you are manufacturing or providing exempted as well as taxable services or goods. The value earlier they said that it will not include the value of services used for value of services in case of extending deposits or loans against consideration when that is interest. But now what they are saying is this particular clause will not apply to banks and non-banking financial institutions. So it means probably it's going to be a setback for them. They will have to include these values, and so the percentage which is so the value on which they will have to reverse the credit will be a lot higher. Okay, in this case.
Okay. So banks and financial institutions will get impacted negatively on
yes.
Yes.
Then another significant proposal or an amendment is to Rule 2A of Service Tax Determination of Value Rules. It has now specifically clarified that the value of construction service will not include the value, or the service element will not include the value of land or undivided share in land. Actually, coming in the backdrop of a Supreme Court judgment in the case of Suresh Kumar Bansal,
Okay.
where it actually struck down the provision or the levy of service tax on composite construction services, a provision to determine the service portion.
Right.
So now, because of this amendment or this clarification, they have said that the service component will not include the value of undivided share of land. So
Right.
that is one.
Right.
And the third one is it actually affects everyone now. The advanced ruling authority
Right.
is has been consolidated. It's going to be one advanced ruling authority for income tax as well as indirect tax.
Right. I
So,
think that
yeah.
hopefully will help a lot of taxpayers, and you will really get an advanced ruling
Absolutely.
in time and not really after 4-5 years
Yes,
of
yes.
delay.
Yes, and they have also stipulated a time limit for entering the advanced rulings. So
Okay.
yes, so it's going to be a timely and a much efficient way of disposing of your application. So
Right.
yes,
And last question, there was no mention about the GST day. There are no specific amendments made which sort of build a further bridge between current regime and GST. Are you still hopeful that GST will be reality by July 2017?
well, it should. I mean, looking at or listening to Mr. Jaitley earlier during his budget speech, he did mention that so the GST Council has reached a consensus on all the contentious issues. They have almost finalized the draft laws. From 1st of April, they are going to reach out to the industry and everyone and start their welfare. Welfare, or they're going to make them aware of of GST. So yes, July 1st, 2017 looks like an achievable target for a rollout date for GST.
Right.
All right. Yeah.
That's interesting, and let's hope that on the budget side, particularly on the income tax, there are a few other changes, particularly relating to the real estate immovable property that were noticed. We all heard Finance Minister say that for the period of holding for long-term capital gain for immovable assets has been brought down from 36 months to 24 months. But correspondingly, there are a few other smaller changes in the fine print. There's a TDS being introduced if you pay a rental exceeding 50,000, even if you are not subject to tax audit. So even a normal person, if he's paying rental income exceeding 50,000 a year, there's a TDS that has been introduced. The significant change is a cap on the loss from house property. So a loss from house property, which is typically claimed on account of interest, shall be restricted to 2 lakh rupees. This, mind you, will not just impact the individuals, but also the real estate companies whose income is liable to tax under the head income from house property. JDA taxation, there is a important clarification. There has been a dispute on the year of taxability in case where a JDA is executed. Typically, revenue has been stating that the capital gains tax should accrue in the year in which the JDA is executed. Now, the government has clarified that it shall be the year in which the project completion happens. In that year, the JDA will be taxable. I think this is again a extremely welcome change. There are many and several other changes, and the Taxsutra team is putting together an analysis, and you will soon receive that in your inbox. Thank you so much for watching this quick insight analysis by Taxsutra team. Thank you so much.